Ready to pick up where we left off with this cash flow statement? It's a bit of a puzzle, but we'll piece it together. I've got your materials here, including those T accounts and the cost calculations from your notes. Do you want to walk through the whole thing step by step, or is there a specific part that's giving you trouble? First up, let's look at the big picture of what we're trying to build. To find that net cash, the first number we need to track down is how much money actually landed in the bank from our customers. We call this cash receipts from customers. Here's the logic. We start with what people owed us at the beginning, add the new sales we made, and subtract what people still owe us at the end. The difference must be the cash we collected. Now, let's pull those numbers from your trade receivables T account in Activity 5. So, we get 579. Does it make sense why we subtract that closing balance of 168 to find the cash? That's a great question. Think of it like this. The closing balance is money that customers still owe us at the end of the year. If they still owe it, we didn't receive it, so we take it out of the total. Make sense? Perfect. Moving right along. Next, we need to figure out how much cash we actually paid out to our suppliers and employees. This is called working to. Before we can find the cash paid, we need to know the total value of what we bought and the expenses we hit. Your notes show a calculation for a total of 467. Let's break that down. I got these numbers straight from your calculations image. Check out that depreciation of 42 being subtracted. Do you know why we take depreciation out when we are looking for cash flows? Hold on. You are absolutely right. The starting numbers for our calculations come directly from those financial statements in Activity 4. Let's trace them together so you see exactly where they live in your notes. Basically, because we never wrote a check for depreciation, we have to pull it out of the total expenses to see the cash we actually owe. Does that non-cash part make sense to you? Sweet. Now that we have that total expense figure of 467 from W3, we can find out how much cash actually left the building to pay those suppliers and employees. It's the same logic as the receivables. We start with what we owed at the start, add what we bought or spent during the year, and subtract what we still haven't paid by the end. So the math gives us 452. That's the cash that physically left the bank account to pay suppliers. Ready to put these two big numbers together in the final statement? Aha! Good eye. You're right. The number 467 isn't sitting there in the Activity 4 question. We have to build it ourselves using the pieces they gave us. Let's trace it step by step from the source. First, we look at the inventory. We sold 319 worth of stuff, but our stock also grew by 4. So we must have bought 323 worth of goods from suppliers. Next, we take the 186 in other expenses from the profit and loss statement and strip out that non-cash depreciation of 42. That leaves us with 144. So the 467 is the total value of stuff and services we got from our suppliers this year. We then use that in the payables T account logic we did before. Does that clear up where that hidden 467 came from? We find purchases. The equation is cost of sales plus closing inventory minus opening inventory. Next, we find the cash portion of other expenses. The equation is other expenses minus depreciation. Finally, we add those two results together to get the total amount we owe to our trade payables. Now that we have every single number tracked back to the Activity 4 page, are you ready to see how these fit into the final cash flow statement table? All right, let's bring it all home. We're building the cash flows from operating activities section now. Everything we just calculated is going into this table. We take our receipts of 579 and subtract the payments of 452 to get 127 from operations. But we aren't done. We have to handle interest and tax. Notice the tax paid is 20, but the tax expense in the P&L is 31. This is because what we owe in tax isn't always what we pay in cash during the year. We started the year owing 28 in tax, added the new 31 expense, and since we still owe 39 at the end, we must have paid 20 in cash. Does that tax calculation make sense? Boom, we just built the whole operating section. Here is the summary. To get cash flows using the direct method, we convert every income and expense item into actual cash moving in or out. As promised, here are some flashcards to help you remember the key logic for your homework. How are you feeling about the direct method now? Ready to tackle the investing or financing sections next? Or did we nail what you needed? You got it. Let's lock this down. Here is every single equation we used and exactly where we grabbed those numbers from the Activity 4 sheets. See how we are just hunting for those numbers? Now let's use that 467 to find the cash paid to suppliers. There you go. Every number accounted for and every equation lined up. Does this summary clear up the trail from the question to the final answer for you? That is the golden question. In an exam, they won't give you the T accounts or the worksheets. You have to hunt for the clues yourself. Here is how you spot the hints. First hint, look for the words direct method. If you see that, you know you're hunting for actual cash in and out, not just adjusting profit. Second hint, always look for non-cash items. If they give you depreciation or a profit on a sale of an asset, they're testing if you know to pull that out of your cash flow. Third hint, when you see 2 years of data, that's your signal to calculate the change. If receivables went up, it means customers didn't pay us in cash yet. Basically, if they give you the ingredients for a formula, they expect you to cook it. Does identifying those ingredient clues make the exam feel